Oh, hello traders and welcome to our weekly market snippets. Today being the July 13th, 2025 on a Sunday, we are expecting the markets to open today midnight. And let's have a quick look of what transpired last week and what we are looking at, what we are expecting to transpire this coming week. So, in terms of what transpired last week, we are looking at the tariff uncertainty. Those are the key themes that we'll be looking at, and also even next week, we will be looking at the record highs because we have seen some assets create some records high. Also, we'll be talking about the sector shift, that is the equity markets. And also, we'll be looking at what to watch out for this particular coming week. So, for the global markets performance, this is a snapshot of the performance, especially the indices. So, we see the Dow Jones last week it lost 1%, S&P 500 lost 0.3% last week, Nasdaq lost 0.1% last week, but the DXY was able to gain last week about 0.88%, and gold was also able to gain 0.61%. So for year to date, we are seeing the Dow Jones, the S&P 500, the Nasdaq, and gold all being on the positive trajectory, all with positive gains, apart from the dollar index, which we are talking about negative 8.6%. Okay, so and the gains here for the Dow Jones, the S&P 500, the Nasdaq have been contributed majorly on because of the tariffs, the fee of the tariff. The weekly losses here for the Dow Jones, the S&P 500, and the Nasdaq have been contributed mostly by the tariff uncertainties or the tariff fears, whereby we were talking about the July 9th deadline that was last week Wednesday, but this has been extended to next week, and we have seen Trump issuing about 22 letters to different nations and also threatening about some tariffs for some specific countries. All right, but we are going to look at that. So definitely, when we have the tariff uncertainties, we usually tend to see the dollar index. Gold. Again, because people usually, investors usually run to gold because it's a safe haven. So anytime we have the geopolitical escalations, like we are seeing in Russia versus the Ukraine, and also the tariff fears or the tariff tensions, people run to commodities like gold as safe havens. All right. So and also the CHF is also regarded as a safe haven. So, in terms of tariff developments, the key focus here is we were able to see Trump announce that 5% tariffs on Canada starting August 1st, which citing what we call the fentanyl issues. Also, we were able to see 30% on Mexico and also the EU, and 50% tariffs on copper and Brazil, and also 25% on Japan and South Korea and other particular countries. So also, like I mentioned, we were able to see about 22 letters which were sent to different countries with the new tariffs effective August 1st, if no deals. Okay, so this means that now coming next week, we might be seeing a lot of some of these nations trying to rush maybe to create a deal, or maybe probably they might tend to ignore, but of course there are those who will come forth. There are those who will come forth in terms of trying to seal a deal before then. Okay, so it's something that we'll keep watching. So in terms of market impact, we were able to see some initial sell-offs, milder than April's revaluation day tariffs. Also, we were able to see investors not to see, but we are looking forward, whereby we are seeing we anticipate the investors to be really monitoring on whether we shall be having deals, or maybe probably there'll be more delays for these particular deals, because already we have seen the first postponement from July 9th to August 1st. Okay, so therefore means with the issuing of the letters, we might be able to see these countries coming forth in terms of trying to seal a deal. But again, nevertheless, we are looking at volatility persisting in the market, and again, it's good for investors or traders to position themselves well, and also manage their risk accordingly. Okay, so In terms of the US market performance, again, on Monday, we were able to see some decline for the major indices like the S&P 500, the NASDAQ, and the Dow Jones. Again, this is due to the tariff news. On Thursday, we were able to see some rally for the S&P 500 and the NASDAQ. They were able to hit record high last week, which is driven by the tech giant NVIDIA, which was valued at 4.02 trillion dollars, being the first ever company to be valued above 4.02 or $4 trillion dollars. Okay, so on Friday we were able to witness some pullbacks in the market, whereby we saw the market dip after Canada's tariff news, and also we were able to see Meta platforms which weighed on the S&P 500. So sector-wise, Nvidia, like I said, really put a record in terms of crossing the $4 trillion valuation, being the first ever company to reach such kind of a valuation. So in the retail sector, we were able to see some weak earnings, especially for the Hele company and also the CAG, and this is attributed to the tariff impacts. So in the global markets reactions, looking at the Europe, the stock 600 was up 0.5% on Thursday. The mining stocks as well, especially the Anglo-American, was able to lead in terms of gains 5%. And this was attributed due to the gains on copper price, whereby we were able to see copper prices surge and hit all-time high, or new record in terms of prices. So for investors, we will be awaiting the EU tariff letters from Trump, which will definitely affect the European market. So we anticipate next week maybe probably to see some a bit of volatility in this market as a result of the EU tariff letter from Donald Trump. So in the Asian market, we have been witnessing a very weak yen last week, and also since last week, but one we have been seeing those that have been monitoring or following us in our live market analysis. We've been looking at weaker Japanese yen. For Nikkei, also, we didn't see much performance. It was actually able to lose last week, and this was as a result of trade stocks stall. So in South Korea, the Kospi dropped by 1.4% on Friday, and this is as a result of again the tariffs and also the export concern, which is tied to the tariff, right? So the emerging markets, the BRICS currencies weakened vis-a-vis the dollar, whereby we were able to see the dollar index gain last week. So for commodities and currencies, oil prices up 2% on Friday. We are talking about tight short-term market, but long-term surplus fears. For copper, we're able to see prices hit record highs after 50% US tariff announcement. For currencies, the Canadian dollar continued to weaken against the dollar after this, and this happened especially after the 35% tariffs news on Canada. The yen again vis-a-vis the dollar, compared to the dollar, continued to weaken and to about 147.12, and that's a negative 1.7% weekly loss. So the key takeaways here is for you as an investor or as a trader to understand that tariff news drive commodity price volatility and also currency shift. So it is important to monitor. The reason why you're talking about the importance of monitoring the tariff news as they unfold, because you anticipate them to affect these particular markets. Again, remember the global markets are intertwined. Some news affecting one market might also end up impacting or affecting the other global markets. So as an investor, risk management really plays a key role, especially during these kind of times that we have or we are anticipating such kind of of volatility. So for economic data recap, in the US, we were able to see the jobless claims on Thursday, which improved slightly but continued claims at highest since November 2021. The NFIB, small business optimism, it's expected to trend sideways in July. We have also seen some markets trend sideways. We have seen a trend sideways in June, and also in July we are expecting such a similar kind of move. In Australia, we are able to see the RBA decision, whereby the Reserve Bank of Australia held the cash rate or the interest rate decision at 3.85% against the market expectation of a 25 basis point cut. So the market was expecting a 25 basis point cut, but the RBA decided to surprise or to bring in a shocker, whereby it was able to hold the rates at 3.85% steady. All right. So, and we were able to see the split decision in terms of how the members of RBA were able to vote. And we had 6 votes vis-a-vis 3, 6 for holding the rates unchanged and 3 for a rate cut. And therefore, the key reasons is for holding the rates unchanged was due to inflation concerns and also the need for quarterly CPI data. Okay, so that now they can be able to gauge. Remember, again, it's being affected by the tariffs because tariffs are inflationary, and these also led for the AUSI or the AUD USD currency pair to rise because the AUD or the Australian dollar was able to strengthen against the dollar, and we were able to see some gains of about 0.8%, again, which is impacted the export stocks. Okay, so for the New Zealand, we were able to see the Reserve Bank of New Zealand also hold the rates at 3.25 as expected. So here there was no shocker. The forecast was holding the rates unchanged at 3.25%, and that's what the actual that we saw, or the actual that was able to be published. So the decision aligned with the forecast, like I mentioned, again reflecting subdued activity and inflation within 1 to 3% target. So we were able to see, as a result, we were able to see a stable New Zealand dollar, again supporting the exporter confidence. So globally, in China, the manufacturing, we're able to see the manufacturing bounce, and also irrespective of the manufacturing bounce, oil demand was down due to EV sales surge. In Canada, we were able to see about 83.1K jobs, which were added in the month of June, and the unemployment rate as well dipping. So the impact here is the mixed data supports a cautious market sentiment. All right. So anytime you see a mixed data, this is supporting a cautious market sentiment. With the RBA, the RB and Z decisions are adding to currency volatility. So those were some the volatility that we were able to witness in the markets. Okay, so in the equity markets, looking at different sectors, Nvidia was able to outperform all the companies, especially in the tech industry. We were able to see some gains on Friday, and also it was able to create to break a record by being the first company to be valued of $4 trillion. Again, raising the AI optimism, which continues to persist. Robinhood shares also were able to hit $100 per share, which was up that 5% in a month. So for the retail industry or the retail sector, HELE Q1 sales were down, all right, 10.8% due to tariff cost. CAG company Q4 revenue, they were not able to hit the expected revenue, so they missed the expected revenues. But for the financial year 2026, the EPS was below consensus, and again, this is attributed to the impact of the tariffs. In the mining industry, we were able to see very nice results in the European miners, especially for Rio Tinto, the Glencore, which were up 4%. And this was a result of the copper rally, because we saw the price of copper hit a new record high. So the key news driving the markets: tariff escalations, Trump's 50% tariff on Brazil, copper, that 5% on Canada, 25% on Japan, 30% on Mexico and EU, among other companies, among other countries, like even South Korea. So that was the tariff escalation was able to really drive the markets, especially the indices, and also the related stocks. All right, Nvidia was able to create a milestone again, being the first company to hit $4 trillion valuation, outpacing S&P 500. Okay, so also we were able to see for cryptocurrencies, we were able to witness a Bitcoin surge, rising up to date. You're talking about, hitting a new record high of about 118K dollars. Okay, per Bitcoin. And also driven by ETF inflows. So for geopolitical tensions, Iran and Israel, we see the conflict easing, but again, we see Russia and Ukraine concerns continue to linger. We are seeing some escalation because last week we had Russia attack Ukraine, and therefore we might be seeing these escalate maybe even into next week. So it's something to really also keep watching next week. So again, what we need to watch this particular week as the markets opens today midnight. We are looking at the tariff updates, August 1st deadline for the 22 countries. So we might start seeing these countries coming out in terms of trying to seal a deal before the deadline, which will definitely again affect the markets. We are also anticipating the EU tariff letter, which was mentioned by Donald Trump. So it's important also to look to monitor the progress of the US-Japan deal, and also the US and EU trade talks, which is very critical, and again, which is likely to impact the market, the US market, the EU markets, and also even the Asian market because of the US-Japan deal. So for economic data, the US Q2 earnings season kicks off. So we expect to see the earnings results of different companies in the US. And again, these will bring in some momentum in the equity markets, some volatility in the equity markets, and the investors will be keen now to be able maybe to rebalance their portfolio, looking at what to buy, what to sell off, etc., etc. Okay, so Australia and New Zealand, we were able to see the rates last week, the central bank's rates last week. So maybe the fallout, the rate, the RBA rate decision fallout might continue affecting the market come next week, and also the employment data, which is already due. So we might be able to see the market react to that. So for New Zealand, consumer confidence data post the Reserve Bank of New Zealand decision is preeminent, or is likely to impact the markets. So for global events, Japan, we are looking at the upper house election on July 20th, which will create some potential political volatility. And in China, we are looking at the inflation data release, okay, which again is likely to skyrocket or to push the market higher. So for the economic calendar, what is listed in the economic calendar? So for the economic calendar, what is listed there on July 15th, 2025, we are looking at the CPI data for Canada at 3:30 p.m. Inflation data for dollar, for the USD, that is the CPI, and also the BOE governor will be speaking, and that is likely to impact the pound. So on July 16th, again, we are looking at the inflation data for the UK, which will definitely affect the pound. The inflation data PPI, which is again going to impact the dollar index or the USD. So on Thursday, July 17th, we will be looking at the employment outlook for AUD at 4:30 a.m. and also the retail sales and unemployment claims for USD. Okay, so those are key data to look at. They are listed in the Forex Factory. So make sure when you're trading, you know which data is coming out when, so that you can be able to manage your risk. So for investors, takeaways, we are looking at, it's important to keep abreast on the market outlook. Basically, volatility likely as tariff deadlines approach. So we are going to witness some bit of volatility because countries will come forth in terms of trying to negotiate and seal a deal. Also, the tech trend, we see the tech trend supporting, it's likely to continue supporting the indices. But again, here, this is where we might have a mixed reaction because, you know, the tariff fears will tend to have a negative impact on indices. But again, the tech trend is bringing some positive impact on indices. So we might see maybe probably a sideways market for these particular indices. And again, it's good to approach it in with a proper risk mindset. Okay, so for risk, tariff-driven inflation, supply chain disruption, and geopolitical tensions are the key things. The risk in the market that we'll be looking at this particular coming week as the market opens today midnight. For opportunities, definitely AI, tech, for instance, Nvidia and Robinhood. Mining stocks because of the commodity rally. New Zealand exporters post rate stability. We might see because the Reserve Bank of New Zealand holding the rates unchanged again supports the exporters. Okay, so the strategy here is to stay patient, monitor the trade deal progress, and diversify amid uncertainties. So for in summary, what we are talking about coming next week, the focus will be on tariff negotiations, the Q2 earnings, and also some central bank moves. And also, the key advice is to watch the trade stocks outcome. Never ignore that because it's going to create some pace or some volatility in the market. And it's important also to brace for such kind of volatility, such that in terms of you watching your risk. Okay, so as I wind up, allow me to quickly look at the dollar index and also gold, and then now we call it a day. So let's go to the charts. So this is the dollar index, and as you have been seeing, the dollar index has been gaining some trajectory, some momentum. Looking at it from the weekly time frame, we were able to see the last week being bullish, but we have been really monitoring the price breaking below this key support level. This was a very key support level, whereby the prices were able to break below as we are anticipating. The moment we see this breakout, then our anticipation was for the price to come to around the 90 dollars level. All right, so as you can see here from the weekly time frame, we are looking at a bullish sentiment. From the daily time frame, also we are looking at a bearish sentiment. All right, so but you can allow me to delete this so that I can be able to show you because what I really look at. So this is a key structure, a key point of interest, whereby we might be able to see the price come to that level. So from this level, we might see the price continue pushing on the downside. Maybe I can squeeze it to the 4-hour level so that it can be quite clear, because for me, I usually look at the monthly, weekly, daily to get the trend. And now I started drawing my zones from the 4-hour time frame. So from the 4-hour time frame, this is the OB, or the bearish order block. So we are expecting the prices to push up to this particular level, even as it tries to fill the imbalance here, because we can see we have some imbalances at this particular level. We have the gaps there. So I'll be looking at a scenario whereby the price pushes up, fills the gap, and then pushes up to tap into this OB, maybe probably before a bearish trajectory. And in case we're gonna turn a bearish, then we'll be looking first of all the price taking out these particular liquidities that it created at around and 96.37 level. Okay, so but in case you see the price break above this level, then we will be pushing higher again to about these levels, 100 levels, $100 level, where we have some liquidities levels. Okay, but what I can say in generally below 100 level, we are bearish for the DXY. But the moment we see the DXY reclaim the 100 level and push up, then I will be looking at a scenario whereby we are entering the bullish trajectory. But again, remember, the tariffs will definitely affect this, because in the long term, the market is affected by the fundamentals. Okay, so when we look at gold, we were able to see last week. We were able to see gold. Let me use a clean chart of gold, the one that I don't really mark so much. So I can use that. Okay, I can use this. So this is gold, and we see this is how it was able to perform. Last week was bullish, right? Last week was bullish. So but on the weekly time frame, we can be able to see a chart pattern, all right? Okay, a chart pattern, which these chart patterns, in what we are looking at or what we are anticipating is a breakout. Okay, so the moment we see the price break on the upper direction, therefore we'll be looking or anticipating gold creating an all-time high. Remember, the all-time high is at $3,500 per ounce. All right, that's where we have the all-time high at $3,500 per ounce, somewhere there. So at that particular point. So the moment we see the break above, all right, the moment we see the break above this particular pattern, then we will be looking at the price taking out the liquidities and also creating a new all-time high. So weekly, we are talking about a bullish trajectory. Daily, we are talking about a bullish trajectory. Again, looking at the breakout, a potential bullish breakout on the 4-hour time frame. Then on the 4-hour time frame, we might be looking at now that the price has created a change of character here. All right, we have seen a change of character there. So we will be looking at a potential whereby the price, in case it pushes on the downside, comes on this bullish OB before we see a bullish sentiment. Okay, before we see a bullish sentiment for the price is now pushing higher. Of course, we anticipate to see some reaction here where we have the bearish order block, right? And once this bearish order block is violated, the price will now be pushing higher to take out the liquidities at that 500 levels where we have the all-time high. Okay, so that's basically what I'm looking at for gold. But for more insights, make sure to join our daily live market analysis, which we do on Monday to Thursday, 10 a.m. to 11 a.m., so that you can keep abreast of what is happening, both technically and fundamentally. So as the market opens today, I really, today midnight, wish you a fruitful week, blue week, a peaceful week, and make sure to trade cautiously. Thank you.